All right, what's going on, everybody? Sorry, I'm running just a bit late here. I had a little trouble with StreamYard with the multicasting. They were having issues with the YouTube title, which really wasn't an issue, but it was something in the way it was loaded up or whatever. So I had to completely back out of everything, set it all up again. Anyway, here I am, Christopher Franks with Texas West Capital, coming at y'all live here. Just a little bit later than normal right here after 11 a.m. Central Standard Time on Friday, the 7th of March, 2025. The first day after Bitcoin Strategic Reserve Day, I guess we could call it, on the day of the Crypto Summit, on the national, the U.S. jobs report, which came out today. I mean, geez, oh whiz, what a day, right? From last night into today already, been a lot of huge stuff. So we're going to talk about some implications of all this and look at some longer term charts and some more macro charts, kind of to understand what's probably going on with markets and whatnot. So hopefully you guys are ready for that. Before we do that, do me a favor. Please just hit the thumbs up, hit the like, share the link, guys. Share the link. It takes like 2 seconds to do it. I'd really appreciate that. It helps with the whole the whole algo thing. I don't do a lot of outrageous headlines and clickbait and stuff because I try to keep this as professional as possible. And so what that does, unfortunately, is it does limit my reach out there unless y'all are sharing it, doing the thumbs up, the like, leaving comments, stuff like that. So if you could do that, that would be great. Follow the channel, follow me wherever you happen to see, be watching this at, whether it's X, YouTube, Twitch, Facebook, and Instagram. I think that's all the places I've got it right now. And do all that because it does help. It helps. And I don't do a lot of nonsense. I don't do any real nonsense, guys. I let everybody else blow smoke up your rear end. I talk to you about the way things are, right? I tell you, as I always say, I never tell traders what they want to hear. I tell them what they need to hear. And that's a big differentiation because a lot of people out there are just going to tell you what you want to hear because if they do, you'll send them money, right? But how does that help you any? It doesn't help you. It leaves you with a bad taste in your mouth. You don't really end up understanding trading and investing in markets and stuff. And my goal is, even if you're just here for free, on the live stream here once a week, is to try and teach you something to get you out of your emotional reactions based on what everything's going on. Because the one thing I can tell you guys is news does not direct market movement. Okay. News events give you temporary knee-jerk reactions, but the trend is already established before those news events. Every once in a while, some news event might coincide with a change in trend. But if you look historically, because news events happen all the time, right? They happen all day, every day. So does price action. And it's only at certain times do we go, oh, well, it's because of that. Well, it doesn't matter that the same thing happens later and you don't get the same result, right? It's just like, oh, at that time it happened. And most people don't, pay attention to what they're doing. They're just like, oh, it happened, and then don't notice next time when it doesn't. So just showing you, what's going on there with that. Let me see here. So it's good to see y'all here. I see we got some people here. We got Gray MK. What's up? MK2 there. What's going on? I haven't seen you in a while, man. Mark showing up. My favorite Canadian here. He says, please don't put tariffs on my comments. I can't afford them. What's going on, Scott? Diego. Yeah, man. Guess who's back? It's good to see you, buddy. My favorite Chilean. Diego there. Bamboo's coming up here. I'm not gonna tell where everybody's from. These are good people. Good people. Andrew's here as well. Bernardo, what's up, buddy? He says it's the final countdown. And if you're as old as me, if you grew up young in the 80s, final countdown, you start thinking of the song by the group Europe. Interesting, right? considering what Europe's going through these days. Really, it's the Brits more than anything, but man, oh man, the Euro area, they're really just having a tough time with everything. Other than the currency, and we're going to take a look at that today as well, guys. The Euro been on a tear this week, up almost 5% since Monday's swing low. Absolutely crazy, right? Digital Mining Solutions, what's up, man? Good to see you. JB is here as well. JB says ETF saw a sell-off before the big pump. Same scenario here, 70,000 coming. It's possible. It's possible. We'll look at that today. Cecilia, it's good to see you as well. Accountability and Success Coach. She is amazing. If you guys are not following her, you really need to. She puts out great content. You can find, matter of fact, you can find her on X. Let me see if I can remember what her oh gosh, it's _ CECILI_A. But if you're wondering, because we talk about all the time here about how mindset is so damn important, it's what retail comes in and they're looking for. Hey, tell me where to buy and sell, or teach me some system, right? But then when you start talking about mindset, which is actually the most important part of the whole trading thing, most of retail just turns off like, nope, I don't want to. I remember a guy one time who said, he made a big deal out of about unfollowing me on X because he said, man, just post charts. I'm like, well, the more important thing for you to learn if you want to be successful in the markets is the mental side of it, the emotional side of it, the psychological side of it. I said, you have to have your mindset right. Well, screw that nonsense. I don't want to deal with this. So I'm, screw you. And I'm leaving. And I'm like, well, it is what it is. But, if you want to get some heads up on more than what I even talk about, she's a great follow, guys. She has so much great content. So we have her. We had a mentor program for a couple of years, and she came in and coached our mentor students for 12 months. Each month, she had a deep dive into success and accountability and all this kind of stuff, and it was really great. So anyway, yeah. Oh, you're welcome. You're welcome. I mean, hey, it's great stuff. I gotta push it out there, right? I mean, that's what we do. Mark, you're subscribed to her newsletter. Me too, man. Me too. It's great stuff. She writes extremely well. I wish I could write as well, but I don't. Nathan, what's going on, man? He says he's from Texas. I love that. Where are you from in Texas, Nathan, if you don't mind sharing? You know me, I'm sitting here just north of Houston these days. But if you guys have been following me for 7 years, I started up in Lubbock. And then I was down in San Antonio and Bernie. And for the last few years, been here just north of Houston. So, yeah. Let me see here. Does she have a YouTube? She has a TikTok. She does. I think she's going to start a YouTube, I think. Maybe if I say this here, we can push her into it. But yeah, really great stuff there. Nathan, you're from San Antonio. No, I know you told me that before. Now that you said, I remember that. Yeah, San Antonio, but from Utah though. Oh, okay, all right. Frank, my buddy Frank here, checking in from Switzerland. And Data's here as well. Good to see y'all guys. So anyway, man, so this is the reality, guys. We're going to talk about the news event of yesterday and today, right? But it's important that you understand news events are just temporary knee-jerk reactions in the market. Okay, and if you understand how to read markets and understand forecasting and stuff like that, you're well ahead of the news events. It's not that okay, this specific news event is going to happen. Sorry, give me one moment here. It's not that like 3 or 5 months prior that there's some specific news events that can happen. You just know that, listen, as we get toward this price level, we should get, this reaction we're looking for. And, again, it just tends to align with that, right? Because human beings are, let's face it, we're predictable. You may think you're not, but I promise you are. You are very predictable. And, even though the market is full of algorithms and, and especially in really mature markets like stocks, like equities, they drive the most of the price action, right? But they're based on human emotion, right? The way in which they trade is based on evaluating or understanding that human emotion, which is why when you're new, you find that you often put your stop losses right around, the liquidity levels, because you don't know any better at first. Or you decide to hold and hold as prices go in the opposite direction, and then you finally get out right as price reverses, right? Yeah, because those areas in which those things are happening are based on general, the way that humans tend to act or react. I guess you should say react. And so, but it's nothing that you learn overnight. And until you learn it, you're going to sit there and you're going to argue about it. No, or not. No, it's not. Markets are random. No, they're not. They're not, guys. Now that doesn't mean you know exactly where it's going to the dollar and every single time. You have to have experience in reading it to get better at it. But even when you do, guys, you're still going to get it wrong from time to time. Number one rule in trading is that there are no guarantees other than you will lose money from time to time, no matter how long you've been doing it. And the newer you are, the more money you're going to lose, the more often you're going to lose it. Okay? So, we'll kind of, that's our intro there, I guess, to get you guys kind of up to speed if you're new here and understanding stuff. JC says the SBR is a massive deal. People just don't realize it, and markets will play on retail. For the U.S. government to say they are having a reserve is mental. I never thought I'd see the day Bitcoin was a reserve. It is kind of crazy, right? So it's funny you bring that up, JC, because anybody that's been following, I do a Beards and Bitcoin show with my two bearded friends, Andrew and Tillman from Arch Public. Excuse me, hiccups here. From Arch Public. We do it every Wednesday, and we started back like around May 29th of last year. And just prior to that, Trump was running for the presidency, and he just kind of started mentioning this idea of supporting Bitcoin and, stuff like that. And we were like, it's good that he's mentioning it, but I don't know, the odds of this becoming a huge part of his running is, not really there. And lo and behold, I mean, look at how quickly, it hasn't even been a year since he first started mentioning it. And now we've signed in, an executive order with a strategic Bitcoin reserve. It's crazy. Life happens fast, right? If you don't slow down, it's going to pass you by, right? It's crazy how quickly these things have really escalated here. And I agree, JC, I agree. I think it is a big thing. And we'll talk about why here today as well. Yeah. Bernardo says, I am never wrong. The market is. That's what we like to believe as retail traders, right? But no, the market's always right, right? So, so let's talk about that. So, well, real quick here, let's talk before we do that. Let's talk about the employment numbers today, right? So we were expecting 160,000 new jobs created. We're expecting unemployment to stay at 4.0%. Instead, we only got about I think it was 151,000, I believe. So we came in a little soft on the jobs number. Unemployment eked up just a bit, went up to 4.1%. And then your month over month hourly earnings kind of ticked down slightly. I mean, overall, guys, it's really no big deal. Last month's jobs numbers were like 140,000. And then I think they got redone to 100 and I think around 125,000. So right now, 151 is more than last month's 125,000. By the way, if you're going to say, oh, they're going to change the jobs numbers, well, yes, that's part of the methodology, guys. Listen, everybody, the last few years, and I'd love to see that retail is kind of getting excited about economics, right? Because economics is the dismal science, right? People don't really like it. They never really have. But y'all that are in here, especially with Bitcoin, you really get more and more interested in economics, which is great. But you also need to get beyond, and it's like trading. You've got to get beyond the free nonsense that's out there. Because most of what you find online for free are half-truths and outright lies, okay? Especially when it comes to economics and finance, global finance, trading, stuff like that. right? Because if it wasn't, if it was usable and systematic, all this stuff, everybody would be successful with it. Everybody would understand economics and how markets work, right? But instead, you post numbers and people are like, oh, well, it's going to get revised. Well, yeah, that's part of the methodology. If you go read the BIS, what the BIS says, they said, listen, this is how it's going to be. You're going to get a revision here, you're going to get a revision here, and you're going to get a revision here. Because that's the way they have to do it, right? That's just the way it works. So you're not really saying anything significant or whatnot. Oh, you have to excuse me. My eyes I've got something in them here. But you're really not saying anything significant or profound by saying, oh, it's going to get revised. And you're really not saying anything, oh, that the government's this really terrible thing, because they're revising it. They're just trying to fudge the numbers. I mean, you can believe that all you want, but at the end of the day, the revisions are part of the process. It just is what it is. And it's always been, folks. It's always been. But people are just now kind of starting to get into this stuff and learn about economics and government numbers and stuff like that. And so they kind of do that. But anyway, so today's news, not exceedingly awful. Again, we're expecting 160. We got 151,000. Unemployment, it eked up 0.1%, from 4% to 0.41%. Remember, historically, unemployment has been like that 5% number. Right, that the historic low kind of average has been that really 4 to 5%. Guys, we are at the very low end, and we've been here forever and a day. Unemployment for years now has been below 4.5%. We spent a lot of time below 4%. So don't let anybody get you all riled up thinking, oh my God, it's the end of the world, it's coming up. It could continue to rise, but right now with what happened this week, there's nothing there saying that, right? Now, that said, with Trump trying to cut a lot of departments and a lot of federal agencies and downsize this bloated government that we have, it is likely we can see higher unemployment numbers. Yeah, I wouldn't be surprised to see it. But as of today and what happened today, it's no like, oh my God, this is the beginning of the end. Maybe it is, maybe it's not. But the little bit that happened today is nothing really significant. Okay. So just want to kind of put that out there. Now on to the Bitcoin Strategic Reserve. So again, we have the crypto summit tonight. President, Trump was putting that together for tonight. And so Lutnick earlier this week kind of gave us this idea that Trump would define much more greatly this strategic reserve idea on Friday at the crypto summit. Because remember on Sunday, last Sunday, he made the tweet about, oh, we're going to create this digital asset reserve thing. It's going to have XRP and Ethereum, whatever. And then he comes in with a tweet a little bit there. Goes, oh yeah, well, of course it's going to have Bitcoin and Ethereum, right? And then Lutnick comes out, I think it was Tuesday, and says, oh yeah, we're going to get greater clarification on this, much more emphasis on Bitcoin than the others. And then Trump yesterday signs that executive order that says, listen, we're going to create a Bitcoin strategic reserve, and we're going to create a digital assets stockpile. Now, there is a difference between a reserve and a stockpile. Okay. But here's the thing. As far as the digital asset stockpile goes, that's going to have to get confirmation. If they want to do any buying in that's going to have to get confirmation by Congress. Congress, decides, how do we spend? Do we spend more, whatever, right? And so if they want to actually buy, XRP, Ethereum, stuff like that to put into the stockpile, that's going to have to get passed by Congress. So there's an issue there. But the strategic reserve is going to be initially, funded, I guess you could say, with the expected $17 billion in Bitcoin that the government currently holds. Now, does that mean they can't buy? So I see some people online here since yesterday kind of posted that, well, they didn't say they were going to buy, and so that's bad, so we're going down. Well, they didn't say that they weren't going to buy, right? So it came out, and what was actually said, let me make sure I say this correctly here, was that the Secretaries of Treasury and Commerce are authorized to develop budget neutral strategies for acquiring additional Bitcoin, provided that those strategies have no incremental costs on American taxpayers. So basically, Trump says, listen, if y'all got money you can spend on it that you already got, you can spend it and buy it. He didn't say they weren't going to buy anymore, which is the prevailing, usual armchair market social media poster, right? Now, there's two ways right now that the two easy ways that they can do this, okay? So the easiest one, well, let's do it this way. So they can do it by executive authority, all right? And what that means is they can use the net position of the Exchange Stabilization Fund to buy. Now, that fund's net position right now is around $39 billion. So, I mean, theoretically, they could start buying today if they wanted to using that. Now, what's the Exchange Stabilization Fund? What it is it's the U.S. Treasury Department's emergency reserve, and they use that to stabilize the foreign exchange in the financial markets, okay? So it was established back in 1934 by the Gold Reserve Act of 1934. Primarily, it's used for foreign exchange intervention, financial stability measures, and special emergency uses, okay? So what does that mean? Well, for foreign exchange intervention, it means that the ESF can buy or sell foreign currencies to influence exchange rates, helping to stabilize the U.S. dollar against other currencies. When it comes to the financial stability measures, it can be used, the fund itself can be used to provide emergency financial support during, crisis, times of crisis. So that would be, where you might lend to countries or you might intervene in markets. The special emergency uses is the interesting one here, okay? So it's been used for unconventional purposes in the past. One of those was back in the financial programs during financial crisis. For instance, in 2008, it was used to guarantee money market funds. And then in 2020, it was used to support the emergency Federal Reserve programs during COVID-19. So we've got historic precedent for the way in which it can be used, right? And like I said, this one is money. This is $39 billion sitting there right now that can be used today. If they wanted to buy $39 billion in Bitcoin today, they could, because the EFC itself operates outside of congressional appropriation measures, right? So the Treasury Secretary has broad discretion in its use. It holds reserves in U.S. dollars, foreign currencies, SDR, special drawing rights from the International Monetary Fund, stuff like that. But historically, it's been used in currency crisis. So again, they used it back in 1995, to support the Mexican peso, and they used it back in the 80s to stabilize the dollar. So, I mean, we've got precedent to use it, and Trump did not say, "Listen, we're not going to buy." He said, listen, go ahead and buy as long as it is budget neutral. In other words, as long as you can do it where it doesn't, incrementally cost the U.S. taxpayer anything, have at it. So, I mean, if you're looking at that, we're looking at that. Now, first of all, they don't know how much Bitcoin they hold, right? An audit has not been done. They assume it's about, like I said, about 17 billion in Bitcoin, right? Basically from things like the Silk Road thing, stuff like that. So that's going to be the basis for it, but they absolutely are being encouraged to go buy more. When the president says, hey, listen, go ahead, if you can figure out how to spend some money here to buy some more Bitcoin for the reserve, as long as it isn't, incrementally weighing on the taxpayer, costing them more money, freaking do it, man. I mean, that's what he's saying. So stop listening to the nonsense online, all right? Now, this is important. Long term, this is important. Why is this? Because right now, You guys have been worried for the last multiple years here. Every time, Biden said something about, or every time the government's wallets moved, you were worried about them dumping $17 billion worth of Bitcoin on the market. Well, now you know that isn't happening. It's everything else aside, $17 billion right now in Bitcoin is staying locked up. And potentially more if they're going to buy more. Now, everybody has been the big narrative since I've been in Bitcoin is that, which is January of 2017, has been the whole supply side, right? Everybody's like, oh, well, there's a limited supply and that's why price is going to go up. No, I've argued this for years. It's not because there's a limited supply. It's because there's a limited supply and there is demand. You can go clip your toenails and try and sell them to people. Now, there's some nasty people out there who are going to buy them. I promise you. But the reality of it is there's only so many toenails that you have that you can clip at any one time, right? It's a very limited supply. But just because it's limited supply does not give people a reason to buy it. Demand is more important than the supply. Okay? The limited supply of Bitcoin just enhances the response of that demand. But the demand is what's important, right? And so if you've got government demand coming in to buy it, starts looking good, right? Here's the other thing. The U.S. does this. Well, guess what? Japan, China, Russia, the UK, everybody. All of a sudden, it becomes a serious thing. Now it goes, well, crap, they really did it. We can't be left behind. So the very fact that Trump did this is a big encouragement, a big kind of like, listen, you need to get this done or you might get left behind here. Especially in a world where fiat is being devalued so much, right? So now the risk is that more countries start getting interested in it. Not just countries, but states, because guess what happened? What was it yesterday? The Senate here in Texas passed the Texas bill for the strategic reserve for Texas. Now, we still need the House to pass it as well. But if the House wasn't ready to do it before, now that Trump is saying he's going to do it, I mean, the House has a lot more reason to do that now. And they would want to do it quicker because, hey, if the government can go out there and start buying Bitcoin now, in addition to what it already has, well, that's going to potentially raise the price of Bitcoin, which means Texas going in and Texas is going to have to buy it is going to cost them more money, right? And with all of this, this is also the companies. Remember, FASB rule change this year. They can hold Bitcoin on their books and their treasury as they should be able to, rather than getting negatively hit for doing so when it comes to their valuations and stuff. So now they see the U.S. has got this and can potentially buy more. They see Texas is over here, just needs one more vote to acquire, to establish its own fund and start requiring. Means guess what? More states start taking it seriously. More countries start taking it seriously. More companies start taking it seriously. So while you may not feel that effect today, the reality is, in the grand scheme of things for Bitcoin, if you want price to go up, it's a very important part of price going up. Because retail is not coming in today and buying enough to really do much with price. I mean, face it, guys. I know you want to be out here and believe that your $100 buy means something, but it doesn't. Right? Retail is basically cannon fodder for price action, for institutional price action. Okay? And the sooner you recognize and realize that, the sooner you get out of doing all the things that retail does, and you start doing the things that institutions and professional traders do. You start getting on the right side of the market, right? So yeah, Nathan posted here. He says, let me go ahead and post this up here for you guys. Thank you, Nathan. I appreciate that, bud. The White House Crypto Summit is Friday, March 7th from 6:30 to 10:30 UTC. Let me see here. That's about 12:30 p.m. to 4:30 p.m. today. my time. So an hour from now, about an hour from now. Okay. So yeah, it's a very big positive. Okay. Now you're going to have maxis out there for Bitcoin and they're going to be upset. It is what it is, right? But if you follow us on Beards and Bitcoin, you know, we love Bitcoin ourselves. We all hold Bitcoin in our own wallets. We don't, you know, we cold storage ourselves. We don't hold it elsewhere. But the reality is the world works a certain way and human beings tend to work a certain way. And this is going to continue to go in that direction, right? I've got some content I'm going to be releasing here over the next few weeks on some deep dives and thoughts about Bitcoin, including this idea that demand is more important than the supply. That oh my gosh, there's a whole bunch here. That Bitcoin not as a gold reserve, but as a liquidity source, a liquidity reserve, so to speak, to run projects like lending and stuff like that, which ultimately is what people come in. You guys are in here today, and even if you're newer within the last couple of years, you might still be all about the whole, you know, on a whole Bitcoin in my own wallet and all that stuff. But the reality is we're a very small portion of the overall population. And when things hit critical mass, when things start getting toward that critical mass, the people getting involved at that point are different than the people who got involved earlier. And the people involved at that point for Bitcoin are going to be much more interested in what can that Bitcoin do for me? What can it yield? How can it back my mortgage? Can it back other loans? Can we create liquidity from it? You know, is it used as liquidity, as a reserve of liquidity there for these other products? And I believe, you know, we've been talking about Beards of Bitcoin, that's where it's headed for, you know, we've been talking about it for a long time, basically since we started it back in May of last year. And feel more about that today than we have in the past even. You know, and it doesn't matter you know, the market, the economy, these things don't care about your feelings. They don't care what you think. Things are going to happen you know, with or without your support, because human beings tend in aggregate to act in a certain way and to desire a certain type of thing. Okay. Now, again, I'm not saying anything against you if you're against that. That's fine. You know, hold your Bitcoin in your cold wallet. You know, we talked many times, myself, Andrew, and Tillman, about the idea that you're going to have two different values for Bitcoin, right? Depending on whether it's held, you know, in your cold wallet or whether it's held on a bank or something. You know, a bank holds it, custodies it, you know, as liquidity for loan products and stuff like that. So that's fine. Do that. That's what we do. All three of us. That's what we do. But just because we do that doesn't mean we don't recognize the way things are likely headed. And I'm telling you something, if you want to make money in this world in markets, okay, you have to get over what you want and what you think should happen, and instead start learning what's actually happening and pay attention to that and trade or invest, you know, accordingly. Because one of the worst things that that traders do and investors do that cost them money in the long run is they hold on to what they think needs to happen or what should happen, their opinions of what absolutely should happen. You know, like we say, okay, well, this is where Bitcoin's heading. Like, oh, it shouldn't go there. So they trade and invest with the mindset that it shouldn't go there, rather than, okay, well, this is what's happening. So how do I involve myself in that to where I can make the greatest return? Because at the end of the day, guys, you don't care about Bitcoin because it's Bitcoin. You don't care about fiat because it's fiat. You care about them because of what they mean to the things that you want to happen in your future. What does fiat or Bitcoin mean for your family's security and safety? That's what you care about. You don't care about Bitcoin itself. Anybody that's saying they do, they're lying to you. They're not thinking about it. You care about what it does and what that means for the important things, which again are if you want to retire early, if you don't want to work 9 to 5, if you want to, have some sort of wealthy family fund at some point, right? Family foundation to support yourself and future generations of your family. So you don't care about Bitcoin. You don't care about the US dollar or the British pound or the euro, right? Or the Kenyan shilling. For my friend from Kenya there. What you care about is what that means for you, for your goals, for your aspirations. So do you see how if you're trading or investing based on what you think it should be and what it should do, rather than what's actually happening, you see how you limit yourself? At best, you limit yourself. At worst, you end up hurting your ability to get to that goal. Okay? I mean, that's really what it means. Or if for whatever reason you don't agree with government fiat and whatnot, and your reason to purchase Bitcoin, and you're purchasing Bitcoin to rail against the machine, right? Well, yeah, okay, but you're not buying Bitcoin for Bitcoin's sake. You're buying it to rail against the machine, right? You're buying because that's what it allows you to do, or what you believe that allows you to do. But you do not buy Bitcoin for Bitcoin's sake, even if it was really just a shiny little coin, because you don't buy fiat. You don't have fiat for fiat's sake, right? You have fiat to pay bills, to take vacations, to buy your favorite coffee creamer or whatever it happens to be, or your Lambo, right? Your timepiece on your arm, right? And I say this, and when I say it, most of you are going to sit here and probably go, yeah, okay, yeah, that makes sense. That makes sense. But most people don't actually think about it. That's why I'm saying it here. Okay? Peter says, buying to protect against inflation and debasement of the USD. Exactly. You're not buying it because of Bitcoin for Bitcoin's sake. You're buying it because you hope that by having it, it's going to protect against inflation and debasement of the USD, right? Exactly. That's why you're doing it. You're not doing it for Bitcoin's sake. So I get, when you look at, maxis, you get kind of concerned because a lot of them, in their mind, they're not understanding why they're buying it. They think they're buying it for the sake of itself, when they're conflating that with actually buying it for whatever they, again, usually, protection against inflation and debasement of the USD, right? So, what do I think about DeFi? What do you mean, what do I think about it? What do you mean, what do I think about it? Do I think, is it going to become some main financial thing? I think there's some possibilities in there. I think there's some possibilities in there. But honestly, I still believe that pretty much anything outside of Bitcoin is still just pure speculation right now. I honestly still believe that. I don't see anybody come up with a significant use case of why. Matter of fact, most of the crap that comes out with the altcoins is just crap, right? They're doing it for the sake of being able to do it, but not because it's really needed. Now, there's some out there that say they're doing it because it's really needed, but again, they're not really. We're not seeing huge returns on it like you would with the company, right, that starts up. So right now, I still think, and I still trade alts. I still treat alts like they're pure speculation. That's it. I don't care who's running it. I don't care what kind of board they have. I don't care what their white paper says. I don't read any of that. None of that. I trade the charts. And I never hold altcoins as investments. It just doesn't make a lot of sense to me. Not right now, anyway. Now it's going to change at some point, maybe. Hopefully, once we flush out, however many hundreds of thousands or millions of these stupid altcoins that are out there right now. But Bitcoin is the one thing that I believe, beyond just the chart for it. Does that make sense? So let me kind of jump up here, guys. Let me see here. Yeah, by the way, we are losing 60 minutes of trading time this weekend. That happens at 2 a.m. Central Standard Time on Sunday, the 9th. So we're gonna freaking bring forward, lose an hour. You know what, Trump? If you want to do something that'll make Americans happy, just completely do away with the daylight savings time these days. Tell the states they're not allowed to do it anymore. If you're in Arizona or Illinois, you don't have to worry about it. You don't do it, but the rest of us, God, man, so stupid, right? Anyway, okay, guys, let me pull up a chart here. We can start looking at some charts. Let me see. By the way, guys, I'm thinking of shortening the Friday sessions and adding a couple of more sessions throughout the week, and just making like the Friday session crypto and Bitcoin. Another session sometime in the week make stocks and futures. Another day in the week we make Forex. What do you guys think of that? Let me know. Leave a comment or something under there. Let me know what you're thinking about that. It's something I've been looking at doing. So please and thank you. I would really appreciate it, guys. Getting your feedback here, trying to put out content that you guys want. I know most of y'all are very much crypto, but I think that would be great, and people can kind of focus and join in where they want with the content with that. So just some thoughts, guys. Okay. Those of you that don't know, I love currencies. I've been a huge Forex fan for a very long time. I love trading Forex. And so being able to bring that out more directly, it would be a lot of fun for me as well. Okay. You guys look like you're looking with it. So Peter says, I agree to stocks. I don't know about Forex. That's fine. And you agree to stocks. Hey, another reason to put stocks out there, right? Nathan says, I'm struggling a bit psychologically with this market, but I think I'm playing it right. Yeah, well, because we're just going sideways, Nathan. That's exactly why, buddy. It's not you. It's the market, right? It's not you. It's me. That's the market talking to you. It's not you. It's me. Let me see here. Let's pull this up here. Let me get this a little bit bigger here for you guys. Okay. So here's the weekly on Bitcoin. All right. I'm going to zoom it in a little bit here. Maybe. It doesn't look as terrible when you zoom in or when you zoom out a little bit, right? It really doesn't look terrible. I mean, this is absolutely huge. And I think there's a really good chance this holds. We had throughout the range, volume dropped off. We have a spike here with this, what would be a spring here, a very heavy spring, right? Which gave us this large spike of volume. And what do we usually get? What I tell you about is when you have huge volume on your spring, much greater than what you have on your selling climax, right? What you're going to get is you're going to get a test of the spring. This very well may be the test of the spring right here. And what you're looking at is for higher low on lesser volume. That's a successful test. And that should indicate that price rallies and breaks out above the range. This is basic Wyckoff, guys. Okay? No volume on the screen. What are you talking about? All you see is me. How do you only see me? Let me see here. Let's see. Try to figure out. I'm looking right at it here. It's showing the chart here, guys. Did you see it at first and then it disappear, or has it just not come up at all? Let me do this. Stop the screen share here. Let me try to do it again. That's really crazy. I'm sitting here looking at it, talking to y'all. I see what you guys see, or what you're supposed to see. Let me try this here. Let me know if this shows up here, guys. Now, that's so crazy. Okay, let me see, guys. Let me know if it's come up now on here. Is it up there yet, though? You're saying it was blank? Nope, still blank. Okay, let me try this. Let me try a different one. How about this? Does this show up? Oh, this is going to be crazy if we can't get this to show up here. Still not? Are you kidding me? What in the heck? I mean, I'm literally seeing it here on my screen, which you should be seeing. Oh, wait, it is now? Oh, thank God. All right. Jeez, oh, whiz. That's so stupid. Sorry, guys. Anyway, so as you can see here, as I was talking about, now that you can see it and follow along with me, again, so we have this range up here, right? And in this range, as we're developing the selling climax here across, what's going on with volume? It's dropping off. Okay. And then what do we have here? We have this huge, like, looks like a spring to me. It dipped down and then closed back up above the range lows here. And when it did so, look at this volume, significantly greater than any volume, including the selling climax here. So when you have volume, this is called a number 3 spring. Okay, there's like 3 different springs. This is a number 3. It's a heavy spring. That's where you get your volume is greater than what you have on your selling climax. Selling climax right here. And so what that means is when you have that, you're going to get a retest, right? We just call it a test of the spring. And what that is after this, you want to see a higher low on lesser volume than your spring. And that's called a successful test. And if you get that, that should indicate that price is going to break out higher here. So what I would suggest is, even if you think it needs to go down to 70, again, remember what I told you. The biggest issue that traders and investors get into is trading and investing on what they think needs to happen, on what they think should happen versus what's actually happening. Okay. So we've still got, until Sunday, 6 p.m., 7 p.m. Eastern, 6 p.m. Oh God, no, we're going to lose an hour, or we're going to jump an hour. So 7 p.m. Central, 8 p.m. Eastern, Sunday evening is when this weekly candle will close. And if we've got a higher low on lesser volume, that should be a successful test of the spring, and we should expect price to rally and break out higher. Okay. Yeah. Bernardo says, I saw someone saying that it's a Wyckoff distribution. The volume doesn't help, right? The volume doesn't help what? That this? No, it absolutely, the weekly volume here suggests that it's much more likely accumulation than distribution, because your volume is dropping off this entire range, right? And coming off of the top, the swing high here, coming down into it, your volume's dropping off. The only time volume expanded, once you're at the top here, the only time it expanded was the spring here. And it was a huge expansion there. And because it closed back up above the low of the range, that makes it a spring. If it closed below, it would be a terminal shakeout. And in that case, we would have expected a little range to develop here sideways before we rallied back in. But it closed back up above the spring, or above the range support, which tells us it's a spring. I mean, most people, when they're saying this is distribution, it's because they're just looking at the schematic, right? They're not looking at the volume. And if you guys see that, if you see somebody's talking about Wyckoff and they've just got a schematic up there that shows like the distribution or the accumulation, immediately stop following them. Because if they're doing that with Wyckoff, then they're probably half-assing and don't really understand what they're doing with the rest of their trading either, guys. Okay? They're probably very primitive retail at best. They're probably talking about shapes and things more than anything else, right? I mean, when it comes down to it, if you're looking to how the difference between institutional and professionals and how retail trades, institutionals and professionals pay more attention to price action and volume than they do. They don't really pay attention to patterns, heads and shoulders, cups and handles, stuff like that. That's a retail thing. Really. Now, obviously, that's a generalization, but, again, if you want to be a successful trader, stop doing the things that not successful traders do, right? Yeah, Fibbo, what's going on, man? Good to see you back. Yes, Fibbo just said here he's going to be back next week. So we're going to finally have him here next Friday. And guys, listen here. If he does not show up next Friday, you have my permission to go yell at him as much as you want. Give him a hard time all over social media, inside TWC, wherever. I have no control over whether he can show up or not, guys. That's him. But yeah, but life gets in the way sometimes, guys. And, this is what we talked about a long time ago. Fibbo tries to be in every other week, if at all possible. But, he also has a full-time job trading for an energy company. And so, most of the time he works from home, but sometimes he has to be in the office. He has to meet with clients. Sometimes he takes vacations. I don't know what the hell a vacation is. I haven't taken one in decades, but hey, I'll make sure Fibbo takes an extra one for me. Anyway, so when I look at this, right, there's a high probability that the low is in. Okay. That doesn't mean it has to be done. All right. If, let me kind of zoom this out here. Well, actually, we can look at, let's zoom into the daily here. Oh, well, real quick, before we go, notice throughout this bull run, notice that at every range along the way, right? We had our first range here. We had another range, another bigger range over here. Really kind of looking more like this as far as the range goes, right? Right. And notice the lows on these ranges, right? When you're getting around these low areas, was all kind of around this, right around this 44.5 area. Okay. Now that doesn't mean we have to hit it here. We're pretty close already. We could be done. But what I'm trying to say is during this entire bull run, that's remained the support on the pullbacks as we've gone up. Okay. By the way, notice this is smaller than, this and this here. As a matter of fact, it's more like this one here. Right here, right? This is a little bit bigger than that. This one, of course, only came to right here. So again, this doesn't have to get down, but if we do start dripping down, I would look for the weekly to find support, the weekly RSI around that 44, 45 area. If we're dousing below that, really kind of shrinking below that, I would say, okay, maybe a top, maybe in. But historically, through this entire bull market here, it's been there or higher. Okay. All right. So I just wanted to point that out. Let's jump in here real quick. Now, if it does break down, where can we look? Well, there's a possibility that this is a triangle here. This is 3 waves up. This is an ABC, and this is an ABC down. This looks more like 5, but could still potentially be an ABC. This one's going to be an ABC, right? So this could be A, B, C, D, and then we get an E here. And then it would get us down. So based on the height of this, we'd be looking for a target of around 69,500. Now, that's just a pattern target, which means it doesn't actually have to hit it. But when we're looking at general targets as far as continuations or breakdowns based on pullbacks, that's what we do. Now, along the way, I would first look at this 74,200 area, which is the daily S1 pivot. I say daily, again, it's the monthly pivot, shows up on the daily time frame. Okay. So I would first look at potentially just a sweep of the low. So just like a little bit lower here and then back up. Because if it's going to drop down, why would it drop down? Because there's still too much supply coming in. And this we already shown right here has a huge demand, right? It's this low volume node right here. So hitting it again, everybody would be, look at somebody here was earlier. I can't remember who it was. I'm sorry. I mentioned your name when you said it, but was talking about how they're looking at 70,000, right? Everybody's kind of looking at it. Everybody's saying we got to get down to 70,000. We got to get down there, right? So how do you hurt retail that believes that? They're either going to go short here or they're going to go short on the breakdown. What do? You suck it all up. and send it right back up, immediately put them back underwater. So that not only now are they liquidated or at least have to get out at a loss, but then they're also going to go long because they'll be like, holy crap, I'm wrong. I got to go long. I got to make up that money. And that's why you get those strong kind of V-shaped things going on there. Okay? So we could see a sweep of the low here if we're going to break down. The second place I would watch is this 74,200 area. It's not like it may not stop exactly on the pivot, but right around that area. Third place I would look is that pattern target based on the height of this pullback right here, which is around 69.5. Those are all still pullbacks in the grand scheme of things here. None of that is bearish in the macro picture. Okay? Bearish as in that's the top, it's done. We're going into a bear market. Okay? Now, if everybody's thinking about it has to go break down here, what does that usually mean? Well, that usually means the market's not going to do that, right? Because the most pain is doing the opposite of what retail thinks it should do. Because what happens if it keeps climbing higher here? It keeps overlapping, climbing higher like it's doing. Well, retail sits here thinking it needs to break down, so they're scared to go long. But it keeps inching up higher, which stresses them out because they're like, oh my God, I need to get in. But what if it breaks down? Because I think it's really got to go down because so-and-so influencer online said it needs to, and they made a good argument for it. And so then you start getting this. I've talked about this so many times over the years. You start getting, if you're in that position, in your head, you're really getting stressed out. And you can't make a decision. And then it goes by a couple of days and then a couple of weeks. And next thing you know, you still haven't bought, right? But price is now up here at like 105,000. And you could have gotten in down here, say at 80,000 or 90,000. And now it's working on you even harder. Now it's like, oh my God. Now it's not like, oh my God, it keeps going up, but it's got to break down. Now it's like, holy crap, not only that, but I should have already gotten in earlier when I was getting all stressed out about it, thinking that I should get into it. You see how this works? And what usually happens with something like that is when you're getting up here around the swing high, retail decides to pile in because they're for sure it's going to break out. And then they get sold into and it drops back down a little bit, halfway into that range, or maybe a quarter into the range, whatever. And then the buying picks up again and takes it back out. And so they missed the run up, or heaven forbid, they went short and they got liquidated or at a loss, and multiple times, right? It went up there, decided to go long up here, but it hits that and immediately sells off. So they're screwed there. And then it goes up and takes off without them anyway. And this happens over and over and over and over again for traders, for retail traders. So if we look at it, we go, okay, what would be the most mental, emotional anguish for a retail trader right now? It would be that it keeps inching its way up. Or it makes, sudden moves up, and then they get excited, like, okay, maybe, and they go long, and then it makes sudden moves back down. You see that? So what could be going on right here? Well, if this is 3 waves up, guess what? It's possible this is a diagonal forming here. So you get ABC is 1, 2, ABC is 3, 4, ABC is 5. And if you see this going, you might want to start thinking we might get rejected right up here, bring it down for a wave 2, and then wave 3 up. And if we do something like that, where we get 5 waves up as this leading diagonal into like that 105,000 area, and then we get like a 38.2 pullback because it would be a diagonal, and often on a diagonal, price only pulls back about 38.2 instead of 50% or more. It can pull back more, but most often it just pulls back around that 38.2 area. Well, what does that mean? Well, that means 5 waves up from that $78,000 low is around $185,000. And that may just be 3. wave 3, and then we get a wave 4 pullback, and then we get a final wave 5, potentially. Okay? Joshua, Fibbo said he was going to be back next week on the stream, bud. He just got back from what he was doing. He's actually in the office today, which means he couldn't join me. He wasn't out of the home office today. So he said he'll be back on next Friday. He told me book it. He said on here he's going to do it. So make sure you guys are holding him to task here if he doesn't. But anyway, so this is what I'm calling. If it keeps going up, my thought is we're building a diagonal here. That's my thought, up toward this kind of 105, 107, 108,000 area. I think we maybe get, that 5 waves up into that area, pull back at 3 waves, and then boom, take off for wave 3. And that'll finally be the breakout here. Fibbo says he thinks back above 100K next week. So there you guys go. So anyway, this is what we're kind of looking. By the way, notice, we're finding support here on the pivot on the daily, which is great here. But I would watch weekly, guys. If we continue with this lower high or this higher low, and we've got lesser volume, and the less volume we have than the spring, the better. But just lesser volume than the spring, that's considered a successful test. Why do we look at that? Because what it tells us is, listen, we had this big response here, right? And this big response can't happen without supply coming in, right? In that area as well. So demand really kicks supply's butt here. Supply has another chance here to push down lower. And if you're getting a higher low on lesser volume, what does that tell you? It tells you that they just either supply decided that the low is in and they don't want to try and push it lower because they're convinced the low is in, or it tells you they may want to push it lower, but they don't have the supply left to do it. This is why the bottom part of accumulation ranges are so important, because you have to remove the loose supply in the market. Now, I know throughout crypto Twitter, people talk disparagingly about that. They use the term paper hands, basically referring to retail that's emotional trading. That's what they're referring to, right? But paper hands also refers to day trading, scalping, stuff like that, short-term trading. So if you can remove the supply from people who are going to be emotional about it and from people who are doing the short-term trading, who's really left to put in supply and to stop your rally higher? That's why accumulation ranges, the bottom portion of it, is so important. That's where you're soaking up that supply. The top part of an accumulation range, you're trying to convince people to buy what you're selling, right? And then you're trying to convince them to sell it to you down at the low end. You're trying to get that movement from the paper hands, the short-term holders, to the long-term holders. And the better you can do that, the more you can remove, the easier time price has to head up higher. Right? By the way, notice right here, notice that off this spring here, again, same idea. Range going through here, volume dropping off. Large spike of volume at that spring low, right? Notice this appears to be in 3 waves as well, where it headed up. And as I told you over here, this is 3 waves up as well. So don't assume just because it's 3 waves up, it has to go down. It could, and then we got our targets there, what to look for. But if we break out above this swing high right here, 92,836.5 here on the Bitcoin all-time index. The idea that this is an A, B, C, D, and we're doing an E, that triangle will be invalidated if we get above that swing high. But we could still be doing an A, B, C, and then D, E, and then down, right? But if price breaks out above this swing high up here at 95,150 and 47 cents on this chart, so this last Sunday swing high, if it breaks out above that, then there is no triangle here. And again, you should be looking at this as a diagonal. So if you want to keep it easy because trading the chop is almost impossible for most people, right? Until you really learn how to trade. All you're looking for is a breakout above this swing high at 92,836.45, and then a breakout of this high up here at 95,150 and 47 cents on this chart. If you can do those two, the odds are likely that you're doing a diagonal, or maybe even a 1-2, 1-2. This could be 1, 2, 3, 4, 5, right? So you get a 1, 2, 1, 2, and then 3 of 3 is the big breakout. So I mean that is possible as well. Based on this here, if this would be a 1, 2 and then a 1, 2, we'd be looking to get just slightly new all-time high at 110,416. Basically trap the breakout traders, and then pull back, probably right here around this R1 pivot, 98,675, 97,000, this area right here. So you'd go 1, 2 here, and then 1, 2 here. So there's a couple of different possibilities, but we get these possibilities because price is just overlapping price action, right? Now, if you're with us at TWC at the Trading Academy, you know, these are your bigger picture ideas. We teach you price action that you can use on short time frames. I taught something the other day, a really simple system that you can use on any time frame, and is substantially successful. And I teach that because even though my goal at TWC is to teach you guys how and why markets move the way they do, right? I mean, that's my big goal. We teach you Elliott Wave, we teach you Wyckoff, we teach you price action and volume, but we teach you for the things that they do and how they can help you understand the overall price action, what's going on, how to forecast it. But I also teach you, here's a simple way to trade that anybody with no experience at all can learn to do. Use the simple risk management that I teach you. That's going to be your lifesaver. Use that simple price action technique to do that. By the way, if you're in TWC and you didn't see Wednesday's price action, go into, again, on the side of the spaces here, go to the educational tracks, go to price action, click on that. In the first tab, I believe it is where we have all our previous recordings over the last few years. Of course, you can use the search feature to find anything you want, but look at the one from this week. You won't be sorry. You won't be sorry. And it's so simple, but most people are trying to be way too difficult in what they're doing for, just their trading. Okay. You missed that, Mark? Man, get in there and check it out, buddy. Let me see here. So yeah, so that's kind of where we're at with this here. Let me talk about some other charts here real quick. Again, if you're new and you haven't been following me since, at least since 2020 or so, I called this low here. I said this was likely the low. We pulled back, we retested here. I said that's the low. I gave a target of 114 to 115. You can see that we rallied up on the DXY here to 114.75. I did that over here. I think I did it right here. Yeah, right here around June of 21. And then this happened when? September, almost November or October of 22. So, if you were with me back then, we did that. From here, I said we were going to break down through 100, head at least to the low 90s, potentially to the 70s, right? And here we go. Now, we've gone sideways more than I expected when I called it up here. But again, this appears to be a flat correction. So we got ABC up for A, ABC down for B, and then 5 waves up for C. And huge rejection. Look at how big this weekly rejection candle is here. And where did we get rejected? We got rejected. We dropped through the range resistance, rallied up, got rejected there, sent down. We're below the weekly pivot. We're almost to the EQ of the range, the S1 pivot on the weekly. Again, this is 1, 2, 3, 4. This is 5 here. Now, it could still push down a bit further. I would look for it to go toward potentially 102.635. And this, by the way, guys, this isn't the index chart. This is the DX1 exclamation point. It is the DX, the dollar futures on the ICE exchange, which is why we have volume. But either we're done here and we rally next week, or we come down a little bit further toward that S1 pivot and then rally up. Come down, we should rally up. Weekly pivot, maybe range high up there, 107. But that'll give us a 1 and a 2, and then we'll be on 3 to head down. So the dollar is weakening against other currencies. That creates liquidity, creates global liquidity, okay? What's up, Mike? He says, I've been following Chris's cult since 2018. Mike's a great guy. He's my other favorite comedian outside of Mark as well. Josh, yeah, definitely, buddy. Definitely go back and check it out, man. I think it'll be absolutely, I can't imagine it's not a game changer for just about every single trader out there. If you just started, if all you know about trading is how to put your orders in the market, in whatever exchange you're on, and that's all you know, you should definitely watch that. From that all the way up to you've got your own system and everything, blah, blah, blah. You should watch it as well. If you're a trader, there is no reason why you should not have multiple very simple trading strategies to use that you can just implement like this, that don't take a lot of thought, that is very easy, very simple to do. Okay. Let me see here. So yeah. So anyway, my expectation is minimally, this is an A, a B, and a C, and we're headed down here toward, I've got this weekly. This weekly needs to go back up here. That was last year's weekly. Down here toward, let me kind of bring this in here a little bit more. See this low volume node right here? Oh, nope, we're going to do this. Okay. Yeah, I can see this getting down here toward this 88 to 92 area. If this is just going to be an ABC. But if this is, 1, 2, 3, 4, I don't think it is. I think this is an ABC due to how long this has been going sideways, which, as you can see, started with a triangle for wave 4 of A. And then we're just sideways here, guys. A little bit of a deviation up here, right back down into it. So, yeah, I see no reason to believe that the dollar is not going to continue lower there. My streak calling it remains. In spite of the silly haters on social media, especially one in particular, I'm not going to name him, but you guys can see him. He's been consistently wrong for like 3 years now. They've been following, that I know that he's been following me because he's been posting whenever I say something, and ends up being right when I say it, wrong when he says it. My God, how long do you have to, how many years do you have to consistently, be on the wrong side before you just shush it, right? I'm just saying, guys. I can feel good about that, right? By the way, look at what that meant for the euro. Look at what that meant for the euro. Look at this. This weekly candle, guys. From Monday's swing low, the euro has appreciated almost 5% against the dollar this week alone. Big impulsive candle breakout and likely close here above the weekly pivot. Well, again, it's the yearly pivot, but it's here on the weekly time frame. So that's why I'm saying weekly. With a spike of volume, guess what? That suggests that we're good to go. He's head up, right? This is 1, 2, 1, 2. 1, 2, 3, 4, 5 is going to give us 1, 2, 3, 4, 5. Pull back. So we get a wave 1, wave 2, boom, out. It's basically the mirror image flipped horizontally and vertically of the DXY, right? And why is that? For those of you that don't understand, the DXY is a weighted index. That means, and it's weighted against USD pair currencies, the Euro USD, the Yen Euros, the Japanese Yen USD, or USD Yen, Great British Pound USD, the Euro USD, I said that, the Swiss franc against the USD, and each one of those is weighted differently. The Euro USD pair is over 50% of the total DXY weighted average. That's why they basically mirror each other. So if you think the DXY is headed down, buy yourself some damn euros. Seriously. The second biggest one is the USD yen, which is about 11 or 12% of the weighted value. So between the Euro USD and the USD yen, that's just about 70% of the weighted value of the DXY. In other words, they determine 70% of the movement, or they have 70% of the influence on the movement. So watch the Euro USD, watch the USD yen. Okay. Let me see here. So this is important. So I'm showing you this because this is important for when we talk about global liquidity. Oops, the DXY here. The dollar losing value, the DXY dropping in value against, so the dollar losing in value against the other currencies basically creates liquidity. And where does excess liquidity go? Into risk assets, right? Oil. Here's the big oil one again. And I just do this. I don't do this to show off, but I do this to kind of tell you guys, listen, if you're just new or you didn't see me when these calls were made, this is what I did. If somebody that's been following since then can confirm it, or you can even look online and find it. But remember when we were coming down here and we were up here around $40 or so, and I was talking about a $3 target. Raoul Pal, I believe at the same time was also looking at around a $10 or a $5 target. I don't know anybody that said we were going to get a negative close here, that we were going to close down around $40 negative. In other words, when that contract closed, holy crap, people were getting paid to take the oil, right? Because this is WTI, West Texas Intermediate Crude. And when you have a contract, you can't take the dollar equivalent like you can with Brent crude, right? Brent crude, you can take delivery of oil or you can take the value of the contract, right? WTI, you have to take delivery. So I said at the time, and I went on shows and posts and everything, and I said, what's going to happen here? Because at the time, about 80% of the world's oil storage capacity was full. Here in the U.S., WTI, right? What we do in the U.S. is we send our oil through pipelines. And Cushing, Oklahoma is the major hub. That's where we have the bulk of our storage. It was 100% taken. And I said, some people, some enterprising folks are going to find some shipping containers somewhere, some oil containers somewhere, and they're going to get paid to take this oil on these contracts. And then they're going to probably use that money they're getting paid to do it to pay for the transfer of the oil to the oil barge, right? And I said they're gonna sit it out there for 8 months or a year. I said, and then the oil is going to be back up, and they're going to bring it in, and they're going to make a crap ton of money. Guess what happened? Yeah. But I bring you this because we've been doing this sideways nonsense here since back over here in the beginning of 23, so 2 years. And ultimately what it looks like is we got an A, we've got a B. It looks like we're finishing wave 1 as a leading diagonal of wave C. It dipped a little bit lower here. I could see it potentially coming down to the S1 pivot around 62.10, maybe even a little bit further to around $60 in this low volume node right here. And if we can get that, then we're looking for a rally back up. Weekly pivot should hold it in check most likely, around $75. It could potentially get up here to $79, $80. But that should hold the resistance as a wave 2. We'll get a 3, 4, 5. I think we're looking down here, mid to low 40s, wave C minimally. That's just minimally. I could see it even coming down here in the mid 30s potentially, just like some capitulation type sell off. But I think we get at least to the mid to low 40s for oil. Why do I tell you that? Because this is a macro chart. This is important if you're doing macroeconomics and stuff. If the price of oil is going down, why is it going down? Because the demand's not there. Right? You got too much oil for too little demand. Why do oil prices go up? Well, because there's demand. Why is there demand? Well, because production, right? Because people are producing stuff. Remember, oil is used in just about everything we have out here today. It's disgusting. Plastics, everything, right? Not just transportation fuel, not just jet fuel. So what does this mean? Well, I've been talking for a while now that we make it to the end of the year. Maybe that's it. And then, maybe we get into some sort of recession. I mean, lack of production, oil prices go down, right? Potentially might be something we see there, okay? So anyway, I think overall, macro, we're looking for oil to come down. One last chart here, guys. This is USDT dominance. Now, some people have asked about adding things like USDC to it because they're, MiCA regulations over there across the pond, not allowing USDT to be used. But my thought is USDT is such a significant portion. Most of it is used outside of that area. So I don't think that's going to affect the dominance chart too much. But if you want to, you can do the USDT point D plus USDC point C, right? If you want to get those two in it, give you a little merged chart there. But if I'm looking at this, one of two things is going on here. One is we've got 1, 2, 3, 4, and a fifth on a slip here, just slightly lower. And that finishes A. B is up here. You can see overall dominance been having trouble really getting anywhere through the weekly pivot, right? You can see the 50% retracement is about 5.93%. So my thought is if we're going to get a dip down in Bitcoin, we would probably get this dip up here, maybe toward that area, toward that 5.93. But I think it would just be a wick and we'd come back down. But ultimately, I think we've probably got an A, a B, and that gives us targets for C at, let me get this right here. Wave C will equal wave A here from where we're currently at 2.2% and likely extend to the 123.6 area at 1.76%. That's the low volume node here. Now, the other possibility I've got drawn on here is this is 3, 4, and then this is 1, 2, 3, 4, 5 to finish wave A. In which case we get a wave A, we get a wave C back up here to around 4%. We get a wave D or a wave C coming back down, maybe 0.7% if all we get is the 4% or so. If we can get this up here closer to, up here closer to 61.8 or whatever on that wave B, we'd be close to around 0.9% for that. But why do I want to show you this? Because if you haven't done it, guys, watch this. This is Bitcoin's. Look at how opposite this is. Right? So if we're done here, that means we're done here. And this will come down and Bitcoin will come up. It's here. Just like it did last time. Remember that 8 months of sideways and then we had the wick down here? That was our last kind of big sideways. And then back up. Remember I said, look, it's 3 waves. Wick up, down, back up, and down. So, if you're concerned about Bitcoin and what's going on there, you can look at the USDT dominance chart. And, you can see that strong opposite reaction. Pretty step in step almost with it. Right? Let me see here. Okay, one idiot on social media was saying, get rid of your USDT by the end of last year, you will be trapped. Well, and that's the thing, right? We get a lot of emotional and clickbait and stuff like that. You guys are never going to get that from me. Anybody that's been following me, you know, no matter what the market's doing, I'm pretty stoic with y'all because we understand, right? And we trade accordingly and we use proper risk management. As long as you do those things, it doesn't matter what the market does, even if it's opposite of what you think, because you're trading intelligently for once, right? You're finally trading like you should be trading. That's important. The more you fight trading like you should be trading, the more you fight proper risk management, the more you fight the idea that trading is something that you do over time rather than something you do overnight, right? The more you continue to fight that stuff, the more you're going to continue to lose your money. And here's the thing, even if you got lucky and you got rich overnight or pretty close to it, let's say you played a stupid meme coin, it just came out, you found out right as it came out, you bought a ton, and that thing skyrocketed. Well, two things are going to happen. One is you'll probably get out well before it ever tops out. You might get out a couple X rather than 100 or 1,000X or whatever, right? The other thing is, even if you somehow manage to stay into it to make life-changing wealth, you're going to lose it. I'm telling you right now, it's the reason casinos play to the winners. If you're coming in with money and you're winning, the casino will approach you and say, hey, you know, if you've won a lot of money, they'll be like, hey, why don't you have this suite? Normally $5,000 a night. Come on, you can get it for free. Here's some free tickets to the Tiger Show. Here's some free tickets to Britney Spears, whatever they happen to be. I don't know. I don't go to Vegas. Here's some tickets to the restaurant over here. Eat up, enjoy. Here's some free drink tickets, right? Because what do they know? They know you are not disciplined. And if they keep you there, you're likely going to go back in there. And they know the longer that you're in, the more of a chance they have. The more likely they are to win, the more likely you are to lose it all. It's the same thing in the markets. If you're lucky enough to make life-changing wealth on something like I just explained there, I can all but absolutely guarantee you that you're going to lose it all. If you need any help believing that, look at all the accounts on social media. They're like, oh, look, I was up $5 million. I was up $10 million. And now I have $500. Because that's human nature. You're not going to lock it in. You're not going to step away. You're going to think that you're better than what you are. And even when you lose a little bit after it, you'll be like, oh, it's just a little loss here. I'm going to get back out because look what I already did. I'm going to do it again. And then as you descend into chaos because you keep losing, emotions take over completely at that point. And you revenge trade. Lose it all. Okay? So, anyway, very important for you guys to understand. Because most of retail, as we do in life, we aren't honest with ourselves as traders. We tend to think much higher of ourselves than we are. And we tend to think not as bad about how bad we are, about the mistakes we made. We kind of just shrug them off. It was nothing. It was just this little thing. Or explain it away real quick and easy because we believe we're so much better than we really are. And that's why you continue to lose money again and again and again, guys. Okay? I got to get out of here, guys. I apologize. I'm already over 12:30 here. Jonathan, MicroStrategy strategy does look great. Draw that descending resistance from it. I've posted that on Twitter, X, whatever. I think I also posted on Instagram and Facebook and all that as well. But look at that chart. That chart still stands. We just had a rally into the descending resistance. We're getting a pullback right now. Look for that impulsive daily breakout and close above that resistance to really kind of set us off. That. All right. As far as the indexes and everything goes, guys, stock indexes, I think it's looking like we'll probably rally next week. The daily RSIs are sitting just at oversold. So, I don't know, maybe we may need a Monday push lower and then, move back up. But I think we're significantly closer to the bottom of a correction than we are to the start of one. with those as well. So you look at the NDX, the SPY, the Dow, the Russell 2000, all those things. We were range bound. We're testing, just below the bottom of the range. Looks like flat corrections right now. So we'll see if we can hold them. They're hanging out right around those 200 MAs for the most part on the daily. And with those RSIs almost oversold, I'm watching for bounces off those. All right. So if you're in TWC, of course, I do the market wrap every night. And so I'll be doing that tonight. And, again, I'll expand on my thoughts a little bit more about the indexes and what I'm thinking about next week as far as stocks go. Most of the stocks that we're tracking in there and we're watching and we're in and stuff like that are looking really good. MicroStrategy looks good. ENPH looks good. God, I can't even remember all of them right now. I've got so many charts going through my head at the moment here. But really, really looking like some potentially good setups, or even some setups have already gotten through there. Okay. All right. That's it. As always, remember, the only thing you control is how much you lose. So please keep working on your risk management. That's the most important part of trading right there, guys, as far as things you can do outside of your own emotional, mental, psychological self. Okay. And you know what? If you're tired of the games, if you're tired of the retail, this is how retail trades and people trying to teach you that nonsense. If you really want to learn, if you're really interested in understanding how markets move, the way they do, how and why they do, and how to read that and how to forecast that, and so much more, join us. We'd love to have you there. TexasWestCapital.com. I haven't made the move up to 128 yet. We're going to do that next week. I've been just so busy with everything. Right now, you can still get in for $97 a month. And that does include Fibbo's threshold theory. It includes Andrew's here right now and Vince, a couple of our head traders, and what they're doing with the TWC Traders Club, which is just, you guys get analysis all day long on the markets and opportunities and trades. And we're letting you know what we're in and all these things. But most importantly, you can finally learn how and why markets move the way they do and how to trade them. But if you get in at $97, we'll keep you in at $97 as long as your subscription doesn't, as long as it continues to renew and it doesn't, miss a payment there. Once that does it, there's nothing we can do about that. You have to get in at the new price at the 128. But even at that, it's so much more than what you ever believe as far as what's available there. But only do it if you're serious, guys. I really don't want your money. If you're just coming in to screw around, I really don't want it. I don't want you getting a bad taste for trading with us because you weren't serious about it. But if you're serious about it, man, we'd absolutely love to have you there. And we'll do everything we can to help you be successful, okay? Let me see here. Revy, what'd you say? You got your membership money back on the alert yesterday? Oh, man, I love it. I love it. And yes, we do it. But, again, we do, with the Traders Club, we do let you know what trades we're in. But the more important thing is we do a lot of explaining as well about what we're doing and why. And Vince even, I think, taught his system in there as well with that as well. Living Life says, best money you can spend will pay for itself. I love that, guys. I love that you guys say that. Data, think positive, be awesome, do something, have an awesome weekend. I agree. And Eric, he says, I need to join. We'd love to have you in there, man. There's a lot of information. There's a lot of content. I honestly don't think there's anybody out there that compares as much to the content that we have in there, nor with as much attention as I actually give you guys in trying to make you better. So again, if you're tired of the retail nonsense, if you're tired of all the retail trading groups online trying to teach you all the retail trading tricks and secrets, patterns and stuff like that that may or may not work, if you really want to learn how to read the markets, you can do it there. It's not going to happen overnight, but you can definitely do it. All right. So anyway, TexasWestCapital.com, jump on that. If you have any trouble with that, send me a direct message there on X, and then I'll help you get sorted on that. Don't forget, Fibbo will be joining me next Friday. And you know what, guys? Listen, if you can't get enough of just Fibbo on a Friday when he can show up, join us. $97 a month. He will teach you his system and daily updates on the entries and the exits. I mean, so you get that as well. It's so crazy, guys. Okay. What'd you say? I can't decide who is more good, Fibble or Chris. Okay, both are crazy. Well, the one thing, I'm about to go here, guys, but the one thing you get from us is we both got, well over 20 years of real life experience trading. And I think that's really what sets us up here. And both of us, we come from the same understanding, right? That news events create reactionary movements, they don't create trends. That social mood is what determines how the market's going. It determines liquidity flows. It determines all that. And so both of us, his system and the way I teach, both of it begin and end with that in mind. So Fibble believes he's better looking. I'm gonna have to go now. Thanks a lot for joining us, as always, guys. I really appreciate you being here and listening in, even if you don't join. But I really think, if you're losing money in the markets, even just 1 month to try it out and see if it really resonates with you, just be sure you're putting in the effort. You're bound to learn so much more in that 1 month. Hell, you'll get access to what I just taught this week, which all but guarantees you're going to make money pretty consistently. The system that I taught, and you get to learn Fibbo's system. $97 if you even just did 1 month. It's crazy. So anyway, that's me trying to tell you that you should join. That said, y'all have a great weekend. Trade safe. We'll see you. We'll see how next week goes. But it's March, guys. We're getting to the end of the first quarter. Y'all ready to do this? Take care.